Hello everyone, welcome to the Ichimoku Charts.com daily analysis for the Euro US dollar FX for Monday, June the 18th, 2012. Well, a large black body candle today. Previous day's trading we had an uptrend in place that was established 3 trading periods prior to that. And we had a series of white body candles with the trading period before today having a very small white body candle at the end of this uptrend did set the market up for a potential change of trend. Prior to that, the buyers were making solid net bullish progress, and then they only made a very small amount and set the market up for today's trading. We haven't technically had the change of trend today yet. We have had, in bar chart terms, an outside day, and they are days of indecision, because we had the buyers strong enough to take out the previous high, but the sellers were strong enough to take out the previous low. So we had some very volatile trading where both sides were attempting to take control of the market. We have seen the sellers close with control of this market by closing down towards the low in a very large black body candle, where we've seen the sellers make very strong net bearish progress on the day between the open and the close, and a much larger amount than any of the bullishness we've seen over the previous 4 or 5 days. So that could be significant for this market. We could see this market to continue to sell off. In terms of candlesticks, this is a potential Japanese bearish engulfing pattern. We have the prior uptrend here, and we have the large black body engulfing the previous white body, and does set us up for that change of trend. So we do need to watch the low of the current candle for a potential lower high and lower low. The way the market's trading at the moment, there's some bullishness in this market, so whether we do see that change of trend is debatable. But we do have very strong support at 125.86, which was previous resistance. The market only just closed down below there, but certainly a day where the bears have taken control and does set the market up for a retracement back to lower levels. In terms of this pattern that I've highlighted here, it was some type of a symmetrical triangle, and we saw the bullish breakdown. The target for this pattern is the extent of the widest part of the boundaries between the upper and lower boundary projected up from the breakout, and that gives us a target around 128.57. So the market made a good attempt to reach that target today, but we saw selling coming in up around this 127.50 level, and very much doubtful whether the market will make that target anytime soon. In terms of the Fibonacci extension, and what we're examining is the uptrend that the market currently still is in. Remember, this outside bar or candle has not changed the trend. Technically we still have an uptrend in place, and we're looking at the relationship between that and the prior time the market was trending up, and we did see the market test above the 100% level, and we've seen strong rejection here. So that could be significant for this market, with the bears taking control of this market when we tested above the 100% level. And also with the retracement of the previous downtrend, only a 2 candle downtrend, but we once again have seen the market test above the 100% level and be rejected from there. In terms of Ichimoku, quite a bit happening at the moment. We still have the market trading down below the cloud, so we have a bearish market in big picture terms. Didn't give us much confidence in the potential for the market to continue trending up, but having been trading a long way away from the cloud, with the breakout and the bullish breakout above this symmetrical triangle pattern, there probably was potential for the market to reach this target around 128.57. The influence of the cloud certainly was too far away for it to be strong. So having said that, we have seen the market be rejected from around this 127.50 region, or 127 region, as I've mentioned. In terms of the other indicators, the Kijun-sen and Tenkan-sen, the market was trading above there for the prior day's trading on this small white body candle, and we've seen the area just above the Kijun-sen hold as resistance, and now we're trading down below. So technically the market is bearish in the medium term time frame and the fast term time frame, but basically so close to them that it's pretty much neutral. If we do see the market continue trending to the downside, then we could easily see the market trade down to the 124.55 area, and that is a very strong support level, so it's one that we should be watching. But as I've mentioned, moving forward tomorrow, let's look for a potential lower high and lower low. 125.86 is an important area, as is the low of the current candle. There is still potential for the market to trade up, but with this bearishness and this bearish engulfing pattern that we've seen in the market today, it's probably more likely that we will see the trend continue or change, to the downside.